Hello everyone, I'm Russ
I'm Giles.
and we are the Morrison Mortgage team. And what we want to do today is widely expected. We want to update you on the Bank of Canada prime rate and what has happened today. The prime rate has increased by 0.75%, now bringing the prime rate to 5.45%. So what does that mean for everybody? So what we budget for is for every 100,000, your payments at a 0.25%, 0.25%, your payments will increase by $13. So on average, right now, your payments will increase by about $39 per month per 100,000. So the impact of this, Giles, fixed payments with the variables and the stuff that we've talked about in the past, the ARM, the VRM, what's happening with that now?
Yeah, so this impacts the variable rate mortgages, and there's two different types of variable rate mortgages, which we've discussed before. So there's types where your payments will stay the same as interest rates change, and your amortization will change, so the portion of interest and principal. And then there's ones where, as Russ was mentioning, the payments will change. So those are the ones where if the rate goes up, your payments will change by the amount Russ was discussing as well.
So you can, if you would like, if you are in a VRM and your payments are not going to change, it means your amortization will increase and your payments will stay the same. If you would like, you can increase your payments to reflect a lower amortization. So you can do that. You have that choice to do that. Okay. So from here, what should we do? Okay. So we've got two options. The first one is we could lock into a fixed rate or we could stay the course. So if you're choosing between a fixed and VRM today, our game plan that we're letting our clients know is that we feel that the increase to the prime rate and rates are going to be, I'm not going to say temporary, but if it goes up, it's likely eventually it's going to come down in time once inflation has been controlled and so forth. So what we're recommending today is that we're both in variables, we're staying the course. And some reasons why we would stay the course at this point.
Yeah, so the fixed rates are still very high. They're all well above 5%. And also, as Russ mentioned, I think the key is yes, the rates have increased more than people are anticipating. However, the term of your mortgage is 5 years in most people's cases. So long term, we still do feel the variable, as and when inflation is under control, will come back down. So it's more of a staying the course, weathering the storm just for the time being. Also, where the rates are right now, so the Bank of Canada has now increased them above what they consider the neutral rate. This is also above the stress test rate, or around about that level as well. So much more than this would cause a lot of damage and isn't what would be happening in a normal economy. So when the economy is back to normal, the rates will be, the prime rate will be between 2 and 3%, and now it's above 3%. The Bank of Canada's overnight rate, sorry.
Yeah, so we do feel that this will be, it's gonna go up and eventually it will come down. Now what's going to happen? What's in the forecast now to the end of the year for the Bank of Canada prime rate? Now they have indicated that they're, depending on inflation, there could be another increase, but a lot of economists are saying that this is probably the top at this point. Could we see another increase before the end of the year? It's possible, of maybe a 1/4 point or a half, and then we just sit and see what happens with inflation. So that's to be determined. We will keep you posted on that as we progress on that. For those of you that are in pre-approvals, Giles, any recommendations on people that are looking to buy right now or that have pre-approvals with us or are looking to buy?
Yes, so if you have a pre-approval and you spoke to us previously, it may be the case now the rates have gone up, the qualifying rate has got higher as well. So it's worth revisiting that pre-approval to make sure that you are still approved for the amount that you were previously approved for. So with an increase in rates, you do qualify at a stress test rate, which now is 2% above what the contract rate would be. So this rate, as well as the fixed rates being high, the variable rates are now at a level where everyone's qualifying will have become tighter. So if you were pre-approved 2-3 months ago or previous, then do contact us just to make sure that you can still be pre-approved for that amount.
Yeah, I mean, and these higher rates are like a double-edged sword. What's happening now is as the rates go up, it's tough the affordability is qualifying for these mortgages to buy these properties has become more difficult, but we have seen a softening in the real estate market where it's becoming more normalized in many cases. There are still multiple offers out there, But a lot of the people are coming, a lot of people that have been taken out of the market are coming back in now as the prices begin to decrease. Finally, two last things that we want to address is that if you are having trouble making payments or you're having any issues with that, we want to make sure we're proactive on this, that if you are having challenges or anything like that, let us know so we can help you with that and maybe give you some options on how to work with that and deal with it for the time being. Also, mortgage renewals. More importantly now is that if your mortgage comes up for renewal, is that the game plan we set when your mortgage comes up for renewal for the next 5 years is even more important than it ever has been with the plan and that we have moving forward. So something that if you do have questions on our mortgage renewal, please reach out. We'll help you with that and give you advice on that and walk you through it. Okay. That's it for today. If you have any questions, you need anything, please let us know, and have a great week.
Thanks.